The other thing I thought that was pretty interesting that Larry said after last month's reading in the inflation and PPI numbers for the month of April was that the way he saw it, another hike was as likely as a decrease. Now, he was certainly in the minority opinion there, but I think in its truest sense, if the Fed was doing its job just by the analytical data, just by the numbers themselves.
You're listening to Kerry Lutz's Financial Survival Network, where you get valuable information you just can't find anywhere else. To thrive in today's trying times, you need the Financial Survival Network, now more than ever. Go to financialsurvivalnetwork.com and get your free newsletter and gift. Financial Survival Network, now more than ever.
And welcome. You are watching and listening to the Financial Survival Network. I'm your host, Kerry Lutz. Well, hey, got PPI numbers out. Inflation is lessening, perhaps. What does it all mean? What does it mean to rate cuts? What does it mean to Jerome Powell? Ted Thatcher is with us now. And Ted, it's great to have you back on the show. And Ted's site is brightlinkwealth.com. Hey, if you got a question for Ted or myself, shoot me an email, kl@kerrylutz.com. So happy days are here again, Ted?
I think Jerome Powell was smiling. I think maybe behind the press meeting yesterday, coming away from the Fed meeting, because I think he got the air cover that he wanted. The CPI came in at break even, which was welcomed, I think, by the Fed after the real spike that was seen the previous month in April. And then, of course, this morning, we had the PPI numbers come out. There was a large spike in that last month, that being the April print as well, up 0.5% actually. Of course, this morning's reading was down -0.2%. And so ultimately, those things are going hand in hand. They're kind of singing the same tune. And as we've talked about, Jerome Powell, I think, despite his desire to be in the driver's seat, hasn't been, because of the inflation rate. Very much, I think the inflation rate has been the informant, Kerry, on Fed policy in the last 18 months, not the other way around that, of course, Jerome Powell would prefer. And going into election season, these are the kind of numbers he's looking for to give him, I think, the air cover they're looking for to have an excuse to consider a rate reduction sometime later this year.
Well, the late, great Alan Abelson, chief editor of Barron's many years ago, once said the Fed is doing what it does best, which is re-electing a president. If that's their intent here, they got to cut sooner rather than later, right?
Yeah, so and the late, great Charlie Munger would say, if you show me your incentives, I'll show you your results. And I think from a president's seat, if he can prop up the value of the financial markets and financial assets, that creates an incentive. And I think that Jerome Powell, for better or worse, does feel the political pressure from D.C. to see some rate cut this year. I think a lot of the smart money right now is betting on that happening sometime in September. But I think the other side of this, Kerry, too, is just ultimately how it affects the average American, because we can see an inflation print that says, hey, we're not seeing additional price increases, but that says nothing about the strain that we all feel, in our pocketbooks on a daily, weekly, and monthly basis.
Yeah, exactly. So they couldn't be more detached from the average person's existence, the average person's reality, right?
Absolutely.
And they don't really care to find out, do they?
Well, the way I see it is there's really been this huge discrepancy between what's happening on Wall Street and what's happening on Main Street. And in my belief, those two things can only be so far apart for so long. I think we have often thought about the changes in the trends of the financial markets, and it's almost like nothing happens, and everything happens all at once. and so we'll see, when those start to come back to earth together. But at the end of the day, costs aren't going down. Maybe they're not going up as much.
Fast.
Exactly.
Or maybe they're just lying and nothing has changed, right, Ted? Isn't that a possibility?
I think that there is, and maybe we talked about this the last time we were together, but I found it very interesting, and that is, what Larry Summers has come out now a little bit virally or famously and said, Larry, of course, being the previous Treasury Secretary, published a really fascinating thread on Twitter outlining the way he has tracked the way the CPI used to be measured. As we know, the CPI and the way it has been calculated has changed drastically over time. Now it allows for proxies. If the price of steak went up too much, we'll replace it with burger meat. Right. If the price of burger meat went up too much, we'll replace it with chicken. And I think now if the price of chicken goes up too much, they might even replace it with tofu.
Or spam. Spam is...
Yeah, spam up there too.
It's a hard food like eggs and milk, right? You can live off of spam.
That's what they say, right? But the problem is, of course, that's not what we have. That's not how I would measure inflation. If I went to the grocery store, it's certainly not if you would. And so it comes back to not only these proxies being allowed, but also the way they have changed what even goes into the CPI. Now, the CPI does not even include the cost of borrowing, which, as we both know, because of the amount of debt the average American has, is a tremendous player in what we experience on a month-to-month basis, just in our standard of living. And so, at least the way Larry Summers calculated it, he anticipated the peak CPI rate not at that still notably high 9% number, but by his measure, it was closer to 20%, if not even potentially a little higher. And so, when I see that, I just see, well, that squares a lot more with the conversations I have with folks on a day-to-day basis.
Hey, there's lies, damn lies, and then there's statistics, right?
I was actually going to say that next, which was, at the end of the day, I think that a lot of these statistics, they can measure them in a way where they can tell whatever story ultimately that they want. And I think some of that has happened. Obviously, I think it is simply the case that prices didn't go up so much in the month of May, but that doesn't mean that the average American is in a very different situation than they were in April. And, we started to see some cooling in the jobs market, but then we got another roaring jobs report. And so, again, we could come back to another statistic that they use a lot of different ways of calculating now, of course, than they used to. But I still come back to that tale of two cities. What's happening on Wall Street versus what's happening on Main Street, and how far and how long those two can be actually stretched apart before we see something happen.
That's a good question. And because if you talk to people on the coastal areas, people in the financial sector, they think everything's fine. And you talk to people in Florida, the economy is booming, they think everything is fine. I don't think many of them really have a glimpse of how precarious things really are here, Ted.
Yeah, it's almost like there's at times a turned up nose toward what they call the flyover states, right? I grew up in Indiana. There's nothing but cornfields for miles and miles. And, those are the average hardworking American, which I think too often has been overlooked the last really couple decades. And they're in a tough spot. And just to come back to that point on statistics, the other thing I thought that was pretty interesting that Larry said after the last month's reading in the inflation and PPI numbers for the month of April was that the way he saw it, another hike was as likely as a decrease. Now, he was certainly in the minority opinion there, but I think in its truest sense, if the Fed was doing its job just by the analytical data, just by the numbers themselves, that would really be the conversation talking point, not the, I think, conversation that is a little bit being driven by the political environment, like we discussed.
Right. And you can never discount the political when you're dealing with government policies, of course. Hey, so where does this lead us to? What can you do once you realize what they're really up to here, Ted?
I think it's a really good question. Ultimately, I think when I look at the financial markets, what I'm thinking is, okay, well, how much risk can I afford to take? Right now, my cash is paying me a very reasonable rate of return. Now, and I say that simply to say, when I think about, positions wise, I'm thinking, hey, I want to have a good, amount of safe money, probably cash, money market, maybe short-term CDs, just because the rates are really good right now. Now, I will say, at the end of the day, the reason we've talked time and time again about Jerome Powell is because the lever that he has, the sort of weight that he can put on the financial markets is just so heavy that it's impossible to ignore. And so, because I think it is quite likely that the battle in DC will win out as it typically does, it gets what it wants. And I think that, for better or worse, it is reasonably likely we'll get some kind of decrease later this year. And I'd be surprised if we didn't see a little bit more of a discrepancy even between what's happening on Wall Street and Main Street. And so if there's a chance to capitalize on that and you see some equities go up, maybe specifically even small cap equities, there could be an opportunity there too.
All right. So basically your advice is keep your powder dry, huh?
I think that, there is a good measure to be taken where some powder, some dry powder on the side makes some sense. Yes, sir.
Okay. Hey, appreciate you coming on and sharing your insights with us, Ted. I tend to agree with you greatly here. I think the situation is much more precarious than anyone cares to think about. All the attention is on, criminal prosecutions of various public figures, the election, the, wars taking place. Really, it's a distraction away from what the real world is happening in the real world here, Ted. Hey, so in any event, we'll touch base with you probably in another month or so and see what the world is showing us. And when the political situation unwinds, which it will in November, then we're going to know what's really happening. Everything is sugar-coated and everything is, rah-rah, while the cheerleaders are out. So in any event, you'll find Ted at brightlinkwealth.com. Link is in the show notes. Questions, comments, kl@kerrylutz.com. When you're at the site, financialsurvivalnetwork.com. Make sure you sign up for your free newsletter. Ted, always a pleasure. Thanks for stopping by.
Thank you, sir. Look forward to next time.
Thanks for listening to Kerry Lutz's Financial Survival Network, your solution to today's trying times. For the latest, go to financialsurvivalnetwork.com. Financial Survival Network, now more than ever.